big mover on the downside today has clearly been Engineers India. That stock is now down 14% after reporting margins that have halved this quarter around. So big disappointment in earnings. Ashok Kumar Purwaha, the chairman of EIL, joins us now to talk about that. Mr. Purwaha, good morning. A very disappointing performance this time around. But if you can just take us through what went so wrong for the company, and was it in both your segments, consulting and turnkey, that you saw a disappointment, or is it only isolated to one segment?
In fact, if you look at it into the last year, we have an order inflow of about 1154 crores, and a year before it was an order inflow of 760 crores. So there has been an upside from 760 to 1154. Majorly is because of the downside in the investment climate in the areas of operations where we are into. But this year, as we have been looking towards into majorly into the overseas market, and we have already clocked an order inflow of more than 1570 crores. And out of this, the major orders are the consultancy segment, and that too also from the overseas market. So you will appreciate in a company like ours, our revenue streams are spread out in 2 to 3 years' time based on to the project size and the project gestation period. So you will find in the coming months and coming quarters, you will find that there is a lot of improvements are going to be there, because our order book today is quite an healthy order book of in the range of 4,100 crore, and that too majorly into the consultancy segments, which you know that where we have a differential margin positions is much superior compared to the LSTK segment.
Okay, Mr. Purwaha, I'll just come back to you. I want to ask you more questions, but we are on a scratchy line, so I'm just going to get that line fixed in a bit. That's the word coming in from EIL, where they say that they have a 4,100 crore order book currently, so things will improve in the quarters to come. However, in this quarter, things have been pretty disappointing for the company. The stock is still down about 12.5%. So we'll try and fix that audio with Mr. Ashok Kumar Purwaha. In the meantime, for the market, it's been quite stable. In fact, with just a marginal amount of positive bias. So 77.40 up about 12 odd points. It is a lot about the result reactions today. So not just EIL, but BHEL is the biggest index loser, down 5.5% after a very disappointing set of numbers. And names like JP Associates as well are tanking post a disappointing set of numbers. So a lot of result reactions is what you're seeing. Prakash Industries, by the way, the stock that has been under severe pressure post that Syndicate Bank bribery news, is down another 20 odd percent. Prakash Industries taking a big knock over there. On the upside, a couple of these oil marketing companies post a very good set of numbers, have done well. So HPCL, BPCL are both up about 2 to 3 odd percent at this point in time. A couple of other names that you should watch out for. Sun Pharma has actually picked up post the addressal by the management at the conference call. So that stock is up almost about 1 odd percent. But by and large, you'd have to say the market is maintaining its head well above that 77.50 odd level. Despite global cues being weak, it's a second day running that our markets have actually outperformed the rest of the globe. And this is purely aided by a couple of heavyweight stocks. But let's get back to talking to Mr. Ashok Kumar Purwaha. Mr. Purwaha, I think we've fixed that phone line with you. So let me just get more details. You said that in the coming quarters you expect to see a recovery because of big orders in your consultancy segment. Can you just tell us how much the margins could recover from this 12.5% level that you clocked this quarter?
In fact, I look at, as I said, like in our case, when we are taking a project which is of ranging from 30 months to about 48 months. So our revenue streams gets distributed as per the gestation of the project cycle. So in the initial about 12 to 15 months time, when we have there is a low revenue, and then it puts it into the peaking kind of a thing. So in the last this year, we have, as I said, we clocked about 1571 crores of a turnover of the new order book position, and majorly from an overseas one. So they will get converted into the revenue stream in next 2 to 3 quarters, and then thereon it will be a steady streams coming in from these. And we are very hopeful that with the present change into the government, there are going to be more investments coming in, not only into the sectors on which we service, that is hydrocarbon and non-ferrous, but in the other areas also where we have now our interest, particularly water and wastewater management, solar power is another areas where we are looking towards that, where we will have a role, and also very keenly looking at how we can provide our services for those 100 smart cities, those coming in the infrastructure development.
Mr. Purwaha, if I remember correctly, this was the same optimism that you shared with us last quarter as well, but it's been 2 quarters now of a disappointment across the board, be it revenues, margins, etc. So on the revenue front, how much, on an average do you think you could recover to in the next couple of quarters? And by the end of the year, by the end of FY15, where do you think the revenues could be at?
As I said, these all our revenue streams are related with the various stages of a projects, what they are. Since there is already a great positivity, what you can see in from April to this time, the order book having gone in to a much larger value. So they will all be subsequently in the coming months will be getting converted into the revenue streams. Besides that, now still there are about 8 months left in this present year, and we are expecting that there are going to be some more opportunity for us where we will have our services in the domestic sector and also keenly looking at an overseas sector, particularly in Middle East and Africa. So I'm sure we will have the coming quarters, next 2 to 3 quarters, you will be finding it will be moving on to the upward cycles.
Okay. One final question. You spoke about the consultancy segment, which will pick up going ahead. But what is the outlook on the turnkey project segments? Because there the margins are at low single digits still. How much could that segment recover to in the quarters to come?
In fact, if you look at in the whole of an EPC lump sum turnkey segment, as such in the areas on which we work, they all are ranging in the range of 5 to 9% kind of a thing, and we are 6+% at this time. But and our consultancy margins in our high-end works, which are more of a process-oriented activities, where our high-quality manpowers are utilized, is where we get a good margins. But going forward, as I said, all those overseas assignment, whatever we have got it into in the news this year, is they are all into our hydrocarbon, our areas of core areas of work. So we expect that we will be doing some better in the coming quarters.
Okay, you told us about project opportunities in solar power and in smart cities, etc. But if you look at what the kind of orders that you used to enjoy in FY09 and FY10, FY11, where there was a high chunk of refinery and petrochemical orders, which actually helped your order book grow quite a bit. Are you seeing within those segments in refinery and petrochemicals any fresh orders that the company might get?
I think you will appreciate that already all these our downstream people, refineries and petrochem in our country, when we look at, we are still in the range of about 10 kgs per capita consumption, whereas the world average is in the range of 25. So there are a good scope of these petrochemical consumption in the country. So we do believe that there is a room for a couple of more petrochemical complexes in the country. So that's one area where we do specialize, and we have a great experience of having constructed the major petrochemical complexes in our country. So there is a scope there. The refinery segment will continue to look for improvement into their present work, and some more additional greenfield refinery complexes also on the card by the various different oil marketing companies.
Okay, Mr. Purwaha, we leave it at that. We hope there is some recovery, because we haven't seen any recovery for the last 2 or 3 quarters, and that's the reason perhaps the stock is still down 14% odd.